Hi, fellow traders. What's happening? I hope you guys had a great hump day today. This was the last day of the month, the last day of the quarter. Hopefully, everybody ended it strong. And I didn't end it as strong as I wanted to. Um, if I just I forced the issue a little bit too much at the end. I started getting happy and over traded a bit on Roku, after that news came out. But um, we're not here to talk about day trading today. Today is I'm going to talk about the swing trading. It has sucked this last quarter, but it's been like that for everybody. Um, a lot of the professional traders that I follow, they just say I just no swing trades. They don't nothing. My mentor one of my mentors that still actively trades, he said not. I mean, it just didn't make sense with the market doing what it was doing. So it was really, really a slow month, and I followed their lead and did not engage to where I would lose my shirt. And I could have taken trades every week, but 90% of them were going to be losers. And I don't like going backwards. I'd rather be flat than to go backwards. But we're going to talk about more about the swing trading. Some things that are going to be reiterated. We're going to get into that here in a minute. But I want to answer one of the biggest questions that not just day traders, swing traders as well. It goes both ways. Should I scale out of my positions? And you guys that know me, I like to scale out. I like to take profit along the way, whether we're going up or down. It only makes sense to me. But we're going to look at that decision, and we're going to look at the pros and cons. And I'm going to talk to you a little bit about why I do it, why I teach that, and why I think it's the smartest, thing to do. It doesn't matter whether you're a professional trader or not. No professional trader is going to come up and tell me that I'm trading scared by taking profit. No professional trader is going to come up and say that because they know better. And it's not about being scared. It's not about being scared. It's about being smart. And the name of the game is locking in profit. And that's what we're doing. So we're going to look at the pros and cons of it, and why I like to scale out, and why I teach new traders who are struggling to get consistent with whatever strategy they're trading. Why I recommend wholeheartedly that you scale out. Number one, it helps with your patience. Okay, once you take that first target, you lock in that first piece of your profit, you can sit and wait all day because you've already locked in money. You've made money already. Now you're just waiting to see if you're gonna make any more, or is it you're gonna be stuck there with that base hit, and you get ready for the next trade. But if you're like me, I'm probably one of the most impatient persons you'll ever want to meet. What makes me patient in the market is the fact that I scale out. And once I get hit that first target, I'm good. Okay, I can wait all day. If I had to. But I'm good with that. The next thing is it helps with your confidence. If you're struggling, if you're just starting out and you don't have confidence in your abilities yet, or you've been trading for a couple of years and you can't find consistency, when you start locking in profit along the way, you're going to be more confident in how you approach the market. The more confident you are, the more consistent you're going to execute in the market. That's a given fact. So being confident is not going to give you overconfidence, but it's going to give you confidence in your ability to pull profit out of the market on a consistent basis if you scale out. Because not every trade is going to hit your final target. Most of them don't. But if you lock in profit along the way, when that trade doesn't follow through, you got money in your pocket. It also helps you manage your risk better. Okay, now if you're taking profit off the table at 1-to-1, okay, a lot of people don't think that makes sense. It's like why are you risking $100 to make $100? Or why are you risking 80 cents to make 80 cents? Well, here's the thing. You're not really risking 80 cents to make 80 cents. Yet your risk is based off your final target. All you're doing is locking in profit, ensuring profitability at 1-to-1. Meaning that no matter what, you're not going to lose what you risk. You're going to make what you risk. At a minimum, you're going to make whatever amount of money you risk. So you got that locked up. The market can't take that from you unless you ignore your break-even stop. But that's a story for another day. So it really helps you manage your risk. So you're not sitting there waiting for it to complete the cycle. It gets close to your entry and then it washes out and you end up stopping out. That's the most frustrating thing in the world, or one of the most frustrating things in trading. It also, and we talked about this, it helps new and intermediate traders, those traders that have been struggling to get profitability consistently. It helps you realize profitability quicker and more consistent. I left out more consistent. But you become profitable as a trader quicker when you start scaling out. All right, and it also, and then we talked about this too, it allows you to profit from the trade even if it doesn't follow through. These are real key elements. Now, there's probably a couple more I could share with you that I've shared with traders I work with, but these are key. Okay, these are the key things. Now, some of the cons is sometimes you're going to leave some profit on the table. Even if you make, if the stock makes the full move, okay, yeah, you're going to make less money scaling out than if you held it for that whole move. But how many of you have it in you, especially as a new trader or struggling trader, to hold through big pullbacks? And that's what you're going to have to do. You're going to have to hold through big pullbacks. Think about how the market makes you feel. If you're in a trade and you're long, and then all of a sudden you start to see red candles print, how does that make you feel? All right, think about doing that throughout that whole trade. How are you going to feel at the end of the trade? Even if you make the money, how are you going to feel mentally? And then in turn physically. So that's the big trade-off. You're going to leave some money on the table every now and then, but over the course of multiple trades, over the course of the week, of the month, you're going to make more money scaling out than waiting on some of these trades, because you're going to find a lot of these trades never make it to the final target. Most of our trades are base hits, doubles, triples, but not the home runs that make it to the final target. And another con is that, yeah, the trades end up costing a little more because every time you scale out, if you pay commissions, like I stopped day trading with TD Ameritrade because TD Ameritrade was free commissions. The trades only cost me a couple of cents because of the SEC fees, the FINRA fees, and all of that good stuff. But it was minuscule. IB charges, doesn't charge a whole lot. So I could, get in a trade, scale out 3 times, have 4 tickets, and have less than $10 commission. But I could have made $400 or $500. That's not a bad trade-off. So yeah, the trade ends up costing a little bit more, but the trade-off is worth it. For the mental equity you save, the physical equity that you save by not sitting there trying to struggle holding through everything and going through the emotional roller coaster, is worth it. So, that's my take on that. Some people may have different opinions, but most of the professional traders I know, they scale out. Now, scaling in, that's a different story. I can't scale in. Obviously, every time I try, it just blows up in my face because I have no idea why I'm scaling in. But that's one of those things where a skill that you have to develop. And I don't care to add, so it's not something that I've chased. But you do have some traders, their strategy, especially if they're chasing a short, they're building a position. They'll add short on every pop, and they're building it so that when you do get the big move down, they can start scaling out, and they make more money. A lot of traders never go in a trade full position. Like I go in a trade full position. A lot of professional traders will go in based on the risk that they see, a half a position, then scale in, and then they'll start scaling out. But again, that's just not. It's just not something that I've gotten into. All right, so here's an example. I know we're not talking about day trades today, but here's an example of, scaling out. Now, the first trade on BBY, I was trying to be cute and catch the reversal up here. It sold off a little bit, but then it caught some bids. And once we broke and out of this channel that it put in, or this top it put in, I closed that. I just flipped it long. And here I scaled out on the way up. Now, 40 was my final target. What do you think would have happened if I sat here and held this saying, I'm not going to scale out. I'm waiting for 40. And I don't care what happens. I'm just waiting for 40. I'd still be waiting right now. Holding the biggest bag of odorless excrement known to man. No, that's Disney. We're going to talk about that in a minute. But this will be another bag. So scale out. I locked in this profit here. Closed out. And once we pushed up and we started to see the price action tell us we're rolling over, I shorted it. Took some off here. I shorted here. took some more off, and then scaled out. Down here is when it kind of ran aground. Eventually it did sell off a little bit down to like 32 or something, but that was later in the day, and I was pretty much, I think I was messing with Roku at the time because the Roku news came out. But still, you made a really decent profit on a stock that, you know, hey, it may not have ever hit your target. Like right here, my target was the 50-day. Now, I accidentally closed it out. I was supposed to be doing a market order, and I mean, not market order, a buy stop or a stop order, and I kind of messed that up, and that's what took it out there. But still, you know, I probably would have stopped out anyway on the bounce here. But like I said, this is just a day trading thing. So just to show you that still, okay, that's 4, 5, 6, almost $600 scaling out. I mean, that's not bad. And I only traded 300 shares. Only traded 300 shares on this every trip and scaled out. You can make money, but if I was sitting here with my little 300 shares waiting to get 40, I'd have been a sad person. And I brought this up because, okay, we'll come back to the SPY here. Here's a prime example, WLTW. Okay, there's no reason in the world why I shouldn't have scaled out here. I should have taken some off at 235. Okay, no ifs and buts about it. But I didn't. I'm like 240 or bust. Okay, that's the idiot in me. So now look at what's happened. It's come back $5 from where I should have taken it. With 300 shares, that's $1,500 I've given up because I did not take profit there. And guess what? If this thing loses 230 tomorrow, I have to get out. I have to bail out of this. Yeah, it'll be with a profit, but it'll probably be with $2,000 less than what I should have if I had scaled out like I was supposed to. All right. And this is where scaling out would have done good. Just stupid mistakes. Stupid mistakes. Disney, this is the biggest bag. This is the biggest bag of odorous excrement that any man has been carrying. I have been carrying this bag since, when was it? May 3rd. Here it is, almost July. It is July. And I'm still holding this raggedy bastard. And I added, of course, when I add, it never works out. It did come up to profitability for me though. But I'm looking for at least 185 so to take some profit off the table so that the trade makes sense. You know, that's the target. Now, sometimes you're not going to hit your first target. You want to scale out, but you're not going to hit your first target. At that point, you have to assess the price action and determine, hey, do I need to just take it off and reset? You know, that's something that you know, that's your choice. And I've been going over those the last couple of days in the live webinar. Watching me trade. You're not watching me trade to follow my trades. You're learning from my mistakes, my successes, and I'm trying to teach you what I'm seeing in the price action that causes me to do what I'm doing. And, that's what we have to do with these trades. But, here we're in Disney. I'm still looking for 185. I was hoping to close this out before the end of this month, but it's just taking forever. Okay, BYND, I did not make the same mistake. I took profit on this according to plan at 160. I think it was a little bit over 160 when it hit. But I wasn't going to make the same mistake I made with WLTW by not taking profit where I was supposed to. All right. And you can see this is the trade plan that I emailed out. Not emailed out, but tweeted out on the member Twitter page or the member Twitter feed. What the open was. Okay, we had the gap up on Monday, so we did open above 148. But because the entry was up around 150, almost 151, taking 4 points didn't make sense. The trade wouldn't have made sense taking profit there. So I moved up. 160 was my first profit target. And that's exactly what we hit. So, we'll see if it continues. If not, I've locked in that profit. I don't know how much it is right offhand, but once I, download it and it's been cleared and the fees attached to it, then I'll know exactly what we made, and I'll post that. But that is in a nutshell, this is a prime example in swing trading why you want to scale out as well, because this could easily happen to my other trade and come back, and I end up not making hardly anything. So we don't want to see that. All right, so what's happening with swings? I'm gonna have time now to do the swing sessions at 9 o'clock in the morning. They're gonna be recorded just like the morning session, the morning trading session. All of that's gonna start being recorded, so that you'll be able to go back and see it if you weren't in that day. I'll be able to post the tweets a lot faster. The website will stay updated every day like it should. I'm gonna have a intern that's gonna be doing that for me, making sure all of that's posted where I don't have to do it. It's taking a lot of weight off of me. So we're gonna keep going with this swing stuff. I think I told you guys the other day, the option class is gonna be coming this summer. And I know a lot of people they're swing trading options already, but I want to give you, an option that if you want to go that route, that's another way you could get in and you could trade some of the higher priced stocks, that are good for swings. So, that's coming. We're going to have a new earnings class. Everything has changed with earnings. And this is why I do the classes every year or so, because they need to be updated. They need to be fresh. The market changes. Conditions change. So we need to go through that. But the special, I am having a 4th of July special, but it's only for the lifetime membership. I'm going to be offering the lifetime membership for the price of a yearly membership. It's only limited to how much I'm going to be able to give, because the rest of that money's coming out of my pocket. So there's going to be limited ones. It should be up and running here sometime tonight where you could get it. The lifetime membership, you never have to pay another dime for anything I do here in the community. Any new classes I do, anytime I bring somebody in to do a class, all of that's for free. You get an hour of one-on-one mentoring where we could work through your problems. But you have to watch that video. There's a way that you have to approach this in order to get out of it what you need to get out of it. It's not what a lot of people think it is. I thought mentoring was one thing, and it's really not. Earlier when I was back in the day, I had to put students out to intern, and I had to actually take a class on mentoring so I could train the people that were working with my students how to mentor, and I had to teach my students how to be a good mentee. So I've got tons of experience in this. 90% of the people out here teaching aren't educators, licensed educators. They aren't. I'm one of the only ones. And I teach new teachers. I teach the classes that they have to take in order to get their license to teach in the state of South Carolina. So when it comes to teaching and education and how things should be, I'm pretty sure I'm an expert in that. And so the way I do things, the way I lay it out, it's because it's a tried and true method, and it comes from many years in the classroom and knowing and understanding how people learn, whether they believe it or not. So that's that. I'm done ranting. I went on too long, but that's what's coming down the pipe. So tomorrow, if I forgot something, I'll be bringing it up. But that's going to wrap it up from me today. I hope you guys have a great rest of the day, and I will see you first thing in the morning.